Today's podcast is thanks to CQ University's MBA for the rest of us. Be about the new business world, not the old school tie. Delivered entirely online with no assessment deadlines, at CQ Uni, you can get a full qualification from $7,000. Search Be Different MBA.
Very shortly we'll hear from the Deputy Chairman of the Australian Securities and Investments Commission, Australia's corporate cop, that's Peter Kell. That's in regards to this new report that ASIC has put out today, showing that as many as 1 in 6, almost 1 in 5 credit card users in Australia are in financial stress and really are struggling to repay back the balance of their card loans. Now, as a result of this report, which has been a study of 21 credit card companies over the past 5 years, there are going to be significant changes in laws, which in the future from January 1 next year are likely to mean that a lender via a credit card to you needs to be able to prove to itself that you can repay that loan within 3 years. Otherwise, no credit card for you. It's going to be interesting to see exactly how the banks and others react to all of this. Peter, this report shows, if you like, the empirical evidence that banks are getting away with what I'd call a rort, effectively to lock people into credit contracts that they can virtually never escape.
We've found quite a concerning level of people who are really struggling to pay back their credit card debt, more than 18%. In fact, almost 1 in 5 people are struggling in some way with either getting behind on their payments or only paying back the real minimum or carrying very large amounts of debt going forward. To have almost 1 in 5 people being in that position clearly signals that we have a problem with credit card debt.
Okay, you call it a debt trap in this report yourself. Yeah. Just explain the trap.
The trap is that when we take out a credit card, we all think we're going to be paying off the full amount every month. But what happens over time is that as we run up those debts, and it's very easy to do so, it's very easy to use credit cards, we get up closer and closer to that limit. It becomes harder to bring it back under control. We take out a second card in some cases, or we end up rolling over that credit every month. That's not a way to manage your debt, and ultimately it's not how credit cards should be used.
But if a bank or a lender with credit cards is charging 18 to 21% interest, where's their incentive to ever have that person pay it off?
Well, it's certainly the case that some of the marketing approaches by the banks and other lenders, some of the ways they've calculated interest, the sort of balanced transfer offers, have actually not encouraged responsible use of credit cards, but rather have encouraged the view that these things are easy to use and easy to control for all of us. For some people they are, but for many people that's not the case.
But haven't we heard through the Royal Commission over these past few weeks ongoing issues about banks and problems of responsible lending? Surely there's a responsibility on a credit card issuer to make certain a person can repay that debt within a reasonable period of time.
That's right. We certainly agree with that, and that's going to be a new law that comes into place from the beginning of next year. Banks will have to undertake a tougher assessment of whether the customer can pay back the credit under a credit card within a reasonable time frame. We're proposing 3 years. And there are some other new laws coming in as well, which we think will help to reduce the risk of people getting into real problems. So, for example, unsolicited offers to increase the limit on your credit card. Those will now be banned going forward. They can often hit people at a weak moment when they're a bit financially vulnerable. You put your limit up by another few $1,000s and you run right up against that new limit. That's a problematic practice that has to stop.
Okay, but then there's the other aspect of this, and that is if you have that 3-year time limit on which a person's got to be able to reasonably pay back that debt, that will increase the repayments that consumers will have to put out. Many people right now who are way behind with their credit cards are not going to be having the capacity to repay those loans back within 3 years.
You will still be able to pay back a smaller amount if that suits you at a particular point in time. But what it does mean is that the risk of, say, a student ending up with a a credit card which has a $25,000 limit is going to be very substantially ruled out, because those are the sorts of situations that we hear about, where people almost have to argue to get their credit limit brought down. And that doesn't ultimately encourage responsible use of credit cards.
Do you believe that banks, in hindsight, and what you found here, have been responsible in the way in which they've run, in the way in which they've administered their credit risks inside their credit card businesses?
Well, we have found that the majority of the major players in the credit card market have not been active in identifying those customers that are at risk.
Hang on, not been active on identifying those people with credit card risks. In other words, they've let people basically rack up debts. This is not responsible, surely.
And that's our message, that we now want to see banks and other lenders taking proactive steps to identify consumers who are clearly having difficulty managing their debt, who are right up at the limit the whole time, who are only ever paying off the absolute minimum, and get in there and help those people to manage their debt more effectively.
Okay,
we will be publishing data publicly on those banks that do that and those banks that don't.
And if they don't do that?
If they don't do that, well, we'll be stepping in to assess whether they are engaging in responsible lending, whether there are other actions that need to be taken, because I think as a community we don't want to see so many people experiencing real difficulties with their credit cards.
There were new rules that were entered into in 2012 that required lenders to apply repayments against amounts accruing the highest interest first. In other words, that when a person had spare cash, the debt with the highest interest would be repaid first. But there were four lenders: Citigroup, Latitude, American Express and Macquarie retained old rules that didn't do that. Now, surely again, this is where you raise questions about, well, even the ethics or the responsibility of the people issuing those cards.
That's right. Those rules that you talk about have seen a reduction in the interest payments that people have made, but they weren't retrospective. What we're saying is banks, if they're being responsible, should have applied those rules retrospectively. Most did, but some did not, as you've just pointed out. We're calling them out. Thankfully, some of them are now going to make that change. But it's another example of where too many players in this market have not been acting in the interests of their customers.
So, the 3-year rule that you're bringing in, where a person has to be capable of repaying a credit card debt within 3 years, is that going to be a retrospective action, or is that going to be something for new cards issued from the point in time in which it's introduced?
That's for new cards, so it won't apply to past cards. But we will obviously be looking at how banks apply that issue of responsible lending across their entire portfolio. As we said, we think the banks themselves should be taking more active steps to deal with those customers that are clearly experiencing difficulties. That's something that we're going to be publicly working on with the major players in this sector in the near future.
But you and I can both understand it's a great business lending money to people at 18 to 21%. Why would you be encouraged to try and change that if you're a bank or a lender?
It certainly is. Well, I mean, ASIC has estimated that if we could manage to shift most of the people on the higher interest rate cards to a lower interest rate card, we'd save about $620 million a year in interest payments. So what we want to see as well is some provision of credit cards in a way that allows people to use them effectively and efficiently. They are quite convenient for many people, rather than a focus on the bells and whistles and what colour they are, when that actually hides quite expensive rates.
But a bank, if you go to the industry and say, we're going to try and encourage your customers to move, and it's going to cost you $620 million a year in revenue, as a business person, I'd go, forget it, I'm not really going to try and encourage my customers to do that.
Well, that's why we've got some of these new laws, the responsible lending laws, the ban on unsolicited credit limit offers. We're also going to be implementing the new law that makes it much easier for you to cancel a card, because what we found with balance transfers is that 63% of people didn't cancel the card that they were moving out of. So one of the problems there is it often appears to be mysteriously hard to actually get rid of your old card. So even things like that we think can make a difference.
Peter Kell, as always, appreciate your time.
Thanks very much, Ross.